Today television. I'm Shail Bhatnagar joining you from New Delhi. The festive cheer is upon us. Greetings to all our viewers from different parts of the world for Navami and season's festivities and all the good luck to you ahead of Dashera. Let's begin this wonderful day with a view on the markets and then we'll go towards the headlines. There is a global risk of trade across the world as far as equities are concerned. Spike in the 10-year bond yield in the US, rising crude oil prices, and more importantly, very decent buying in safe haven gold points to a bit of a problem as far as bulls are concerned across the world. Be that as it may, let's first look at how the headlines are shaping up. Indian stocks are likely to remain sideways to flat on Monday as weak overseas cues deter bulls on Dalal Street and a raging conflict in the Middle East spikes crude oil and gold futures. Volume is likely to be thin ahead of Tuesday's holiday. And it's raining quarterly results on Dalal Street, especially from banks. ICICI broke Street's estimates with a 36% on-year jump in second quarter profit after tax at 10,261 crore rupees, thanks to lower provisions and a surge in net interest income. Good morning once again, ladies and gentlemen, and welcome to Market Today on Business Today television. It's a wonderful, wonderful weather in Delhi. It's Navami today, and our sincerest, most best wishes to you for the festive season ahead. And of course, tomorrow is Dashera. May the goddess help us in leading pure and good lives. With that, let's begin our view on the markets today. In front of you, you'll see the Nifty daily chart. Friday was a bit of a pain, as was all of last week. Remember, we are now in the penultimate, in fact, the last week of October's futures and options expiry, which ends on Thursday, and it hasn't been a pleasant outing for the Nifty as far as this month is concerned. We've seen a drop of about 1% all of last week, and the weakness, especially in the Bank Nifty, is now a bit worrisome. This is the Nifty daily chart in front of you. 19,552 is where the Nifty shut shop on Friday, and it was a sideways trend. In fact, the index ended at a 2-week low and also the day's low as far as Friday is concerned. There is a global risk of trade in equities that is deterring local bulls, and you can see with the subsequent charts on your screen that crude oil prices as also prices of gold specifically have spiked very sharply. Gold is now well above $2,000 an ounce for a very brief moment on Friday, and that is what is signifying a lot of incoming pain. You'll also see the 10-year US bond yield as far as the graph is concerned. That's peaked at a fresh 16-year high of about 5%. While we've seen a lot of pain coming into the Indian equities market because of the 10-year yield, mainly foreign funds have been selling and repatriating that money to US markets. But that is how the market is. The trend as far as Nifty is concerned is down. Cues are weak from overseas, and this surging pain that you see in the Middle East between Israel and the Palestinians is causing a global risk of trade as far as equities is concerned. We had already seen pain getting reflected in Nifty all of last week. On Wednesday, it closed below 20-day exponential moving average, and Friday's close is now below 50-day moving average. So, and there is more importantly a lot of shorts being built up, at least in index heavyweights. Apart from ICICI Bank, which we will discuss in great detail in a bit later, all other stocks look fairly weak as far as index heavyweights are concerned, and it was ICICI Bank whose earnings came post-market close on Friday that is most likely to see a very, very strong uptick initially. Profit after tax has gone up by about 36% to 10,260 crore rupees, and that's on because of lower provisioning and higher net income. So anything that could go right as far as ICICI Bank is concerned has happened, and that's a very strong motivation for Nifty to at least defend 19,500 from the bears, if not rise fairly smartly here. So that's how the Nifty is positioned as far as today's trade is concerned. Volume will be thin, mainly because tomorrow is a holiday. Trade will be choppy to sideways, and bears will have an upper hand. If you see the Nifty options chart, you'll see a very strong support at 19,400, 19,300 as far as option statistics are concerned, and at 19,600 to 700 you will see a major resistance on the Nifty. Over a period of time, the trading range of the Nifty has actually moved lower as bears have gained a lot of strength. Coming to Bank Nifty, of course it ended flat, down 31 at 43,723, but the pain in the Bank Nifty is phenomenal. The daily chart is there in front of you, and you see a 3-month low on the Bank Nifty, which is the lowest since June 23rd. So exactly a 3-month low in front of you. July, August, September and October, actually it's a 4-month low. So that's how the Nifty is positioned, well below 100 DMA, and the brief line that you see is where the 200 DMA is, and since it's already so close to the 200 DMA, it's most likely that you will see a test of that happening. Nifty Bank will have ICICI Bank as a major driver for sentiment today. We've discussed the earnings so far, so that looks positive, as also Kotak Bank. Over the weekend there was an announcement of a fresh guard in the C-suite. Mr. Vaswani takes over as the Chief Executive Officer, and that is likely to enthuse bulls for a very brief moment. Of course, Kotak Bank has been one of those named underperformers as far as the Bank Nifty is concerned, as also the Nifty, and that is likely to have a sentimentally positive impact as far as Bank Nifty is concerned. So Kotak, ICICI Bank on the long side as far as Bank Nifty and Nifty are concerned, and of course a sideways to weak to flat trade you'll see coming in from the Nifty and Bank Nifty on Monday, mainly because it's the holiday tomorrow, and also we are in the last week of October's fairly painful kind of an expiry that you've seen. Cues from overseas are pretty bad. The US Dow Jones index, we have a chart for that as well in front of you. If you see it in sync with the US 10-year yield, you'll realize how pain is coming into the system. 3 successive days of losses as far as the Dow Jones index is concerned, and it also ended fairly sharply lower. So that's the Dow in front of you, and if you see the 10-year bond yield, it will be completely reverse on the other side. So this is how markets are structured, and let's touch base with Mr. Deepan Mehta immediately. Mr. Mehta is a very long-term watcher of equities, and has had a very decent run on Dalal Street so far. Good morning, Mr. Mehta. Greetings to you on Navmi, and festive greetings ahead of the Shara to you and to all your clients. Welcome to Market Today and Business Today.
Thank you for having me on your show.
How do you see sentiment on Dalal Street?
I think I don't see any of the fireworks.
How do you see?
At least. Yeah, you asked about the sentiment on Dalal Street, and I don't see.
Please continue, sir.
Sorry, can you hear me?
Yes, Mr. Mehta, we can hear you clearly. Please share your views on sentiment on Dalal Street, sir.
So first of all, thank you for having me on your show, and season's greetings to you as well. I know we are entering the festive season, but so far we have not seen any fireworks on Dalal Street. And the reason for that is the relentless selling coming in from the FIIs, which clearly is having a negative effect on the index stocks. And therefore we see the Nifty and the Bank Nifty just about stagnating, but there is some action in the mid-cap stocks. And I think the old problems continue to linger on and clearly are testing the investors' patience. By old problems, I mean higher interest rate, inflation in the developed markets, and now we have one more geopolitical event to deal with as well. So I think it's testing everybody's patience over here, and there's some amount of fear, I would say, creeping into the minds of investors about the way a lot of the small mid-cap stocks have rallied. Valuations are rich over there, and maybe this earnings season will be the defining point for the small mid-cap companies. If they're unable to deliver as per investors' expectation, you could expect some trouble over there as well. So on the whole, I think that we should we should be a bit cautious at this point of time and wait for the clouds to clear as far as interest rates, inflation globally is concerned, as well as this geopolitical event which we are dealing with.
Mr. Mehta, if you see how the economy is structured, GST numbers are good. Over the weekend, we came to realize that sales of cars above 1 crore have exceeded sales of cars between 50 lakhs and maybe 99 lakhs. So there is one part of the economy that's doing fairly well, and the broader corporate structure, if you see the ICICI Bank earnings, has been pretty good. Why do you think markets are in such a pain or disenchantment with the bulls? What basically is wrong in the structure?
No, I think, as I explained, that the basic issue at hand is that we are seeing a lot of FI selling continuously happening. There were periods when they were net buyers, that time the market really zoomed up, but at this point of time, again, they have turned net sellers. And the way rupee has depreciated and the way US bond yields are, that's sucking up a lot of global liquidity. And we are seeing that entire emerging market not doing as well. So we are again in the midst of what we call a risk-off trade. And risk-off trades are never very good for Indian markets, especially emerging markets. And that's the effect that we are feeling just now. I agree that a lot of global funds, a lot of domestic funds are coming into the market, but those are targeted towards the small mid-cap stocks where valuations are rich. And from that point of view, some amount of caution is required over there. And on the whole, I think it's more to do with the fact that the flows globally are not favorable. And the thing about FI flows is that they are the price makers. The way they buy and the way they sell, they tend to create the prices. Whereas domestic investors, be it mutual funds, portfolio managers, they are the price takers. So they are more sedate when it comes to their buying strategy. The trading strategies are more sedate than the FIIs who want to buy or sell at any price. So that's what's happening just now. At the same time, I think we are seeing that there are certain issues in terms of the domestic economy, and high base certainly is coming into play. A lot of the globally focused companies and a lot of Indian businesses in the index are globally focused, like software, pharma, metal companies. There is a lot of headwind when it comes to their earnings. So it's a kind of a mixed picture with the companies doing well,
Right.
valuations on the higher side. Yeah.
Okay, let's put this discussion to bed. Of course, markets remain buoyant, markets remain very happy and celebrate, and we celebrate with them as well. But there are times when they trade sideways, and perhaps this is one of those phases that the Nifty and the Bank Nifty are going through. Coming to earnings, Mr. Mehta, beyond the pale of luck and hard work is what ICICI Bank reported as far as its second quarter profit was concerned, up 36% year on year, exceeding 10,200 crores. How do you see this earning statistics and the granularity from ICICI Bank? Do you think this is a time to add this stock to the overall portfolio? And what does this portend both for corporate India and for the banking sector?
First disclosure, we and our clients are invested in ICICI Bank, and great set of numbers coming through. I think last 2-3 years, the company has been really turned around and have gone to higher growth rates. So I think from that perspective, certainly it's a buy, and I think a lot of investors own the stock as well. It's been on the buy side list for many analysts, and many of the professional investors have got ICICI Bank as part of their core holdings as well. But the issue is that the stocks like ICICI, Kotak Bank, HDFC Bank, Axis Bank, to an extent are overowned. A lot of them are owned by the FIIs as well, and whenever FII selling comes, then these stocks also feel the brunt of FII selling. And that's the reason why, despite good numbers, we may not expect ICICI Bank to deliver the same kind of outperformance it has done over the past 2, 3 years or so. So, in my opinion, at best, it's a hold at this point of time.
Okay. The other overhang, and which was regulatory, more regulatory in nature, was on Kotak Bank, and we've seen the announcement of a fresh CEO taking charge from the founder, who's done admirably as far as creating value for long-term shareholders is concerned. Kotak has been a rank underperformer, Mr. Mehta. This change in guard at the C-suite, do you think this is in benefit for long-term investors? And at this price, does Kotak at least merit a sip on a monthly basis?
Of course, I think whenever there's change of guard, there's always expectation that growth rates may look up or the company may enter into a new phase, and that certainly is possible with Kotak Bank. New leadership, fresh ideas, new way of looking at operations, and new opportunities may be given preference. So yes, I think from that point of view, certainly Kotak Mahindra Bank will benefit from new thought ideas coming through. But it's generally a well-managed bank. It has always kept its NPAs well under control, and they have been very responsible bankers from that point of view. So, one cannot expect major changes under the new CEO. But nonetheless, I think, as you said, it removes a certain element of uncertainty in the company. And as I said earlier, the likes of Kotak, ICICI, Axis, HDFC Bank, to an extent, they are overowned. And right now, if you want to put allocation in the banks and NBFCs, it's just that the smaller banks, the smaller NBFCs are the ones which are delivering higher growth rates. And that's where I think all the action is in terms of investor attention. I mean, look at the numbers which have come through from smaller NBFCs like, say, L&T Finance or Poonawalla, Credit Access Grameen. And the same holds for even smaller banks and even PSU banks, like Bank of Maharashtra, there is Federal Bank. All of these companies in the past, they have been under stress because of NPA. But now I think they're over the NPA hump, and they're looking at aggressively expanding their credit book, whereas the likes of the top four private sector banks, for them, it's been business as usual. So it's just that there's FI selling in the top 4 or 5 private sector banks. Their growth rates have been the way they have been for the last several years, but the smaller banks have started to perform, smaller banks and BFCs have started to perform much, much better, and domestic flows are going over there rather than these top 4 private sector banks.
G. That's a fair point you make that, despite stellar earnings from banks such as ICICI, there is this overhang of foreign institutional selling in the broader market, and since they hold stocks, since they hold equity in banks such as ICICI Bank, even these strong earnings may not be, greeted warmly as far as the Lal Street is concerned. Mr. Mehta, let's shift focus to cash stocks, where this overhang of sustained FII sales is not that much. Where do you see value at this point of time on the Lal Street? A lot of our friends who manage asset management companies are coming up with newer and newer new fund offerings aimed at the small and the mid cap sector. Is that a bubble in the making? And how do you read the broader sentiment in cash stocks?
See, I think that this earnings season is extremely crucial. And from our perspective, we are not doing any activity at this point of time, buying or selling. We are just, trying to understand which companies have come up with decent set of earnings, what managements have to say, and then how the outlook is for the next 2, 3 years or so. So our focus is right now on researching these companies, creating or updating our stock watch, list of stocks that we are watching. And then once the earnings season kind of winds down, that's when we try and take the decisions as far as which stocks are looking more interesting, which are the new ideas which have emerged. So I would like to just refrain from giving any names. In any case, in the beginning of the issue, I mentioned that we are slightly on the cautious side. And there is a lot of action, there's a lot of potential in small mid cap stocks, no denying that. But then valuations are also very rich. There's hardly any margin of safety. And even 1 or 2 quarters of disappointing earnings can lead to these stocks correcting by 20-30%. And that's when I think the opportunity will come up in the small mid cap stocks. They have corrected by 20-30%, 40% also because of a poor set of earnings. or some negative development which may be transient in nature. So we're looking for that kind of a phenomena where a good business, has some issues, some headwinds transient over the next 2 3 quarters, and the market kind of is goes ahead and sells off this stock, and it is then available at a reasonable valuation, providing margin of safety. So I don't want to recommend any stock, and I reiterate that we need to be a bit cautious. There are just too many moving parts globally as well, and we are in a risk of trade. So let's just be a bit more careful and not go ahead and just increase our level of stock investment. This is a good time to raise your cash levels in your portfolio.
I think this is one of the most practical advice that I've heard after a long time. Raise cash levels, be cautious. There's no need to, sort of do talwarbazi in the market and get your head chopped off. These are volatile days, and they too shall pass. And once the sun shines, we'll again look at the investment thesis as far as markets are concerned. Mr. Mehta, I'm sure you have a list of stocks, a list of sectors where you see the next advent of money inflows. Would you like to share those names or those industries where you think money flow will increase?
Yeah, I think pharma has underperformed for many quarters, and maybe rightly so, because we saw stagnation of earnings over there, and there was this entire US generics play which was not working out for these companies because of intense competition and price erosion. We are seeing some changes over there, and I was pretty impressed with most pharma earnings in the last 2 quarters or so. Valuations are pretty reasonable over there as well, and these companies are strongly entrepreneurial driven. They are trying to move up the value chain as well, and at the same time, balance sheet quality is exceptionally good. So I think a lot of ideas may come in the pharma space. As I said, we are being bit cautious at this point of time, but I sense that this earnings season will be very good for pharma companies, and a lot of stocks will come out. Good ideas will come out within that sector, especially companies which earlier we were avoiding because of US generics market. Now they may suddenly come in the limelight. Companies like Sun Pharma, Lupin, Aurobindo. I think all these companies have got very strong US franchise, which was not doing well. But certainly, I think things have improved over the last 6 months or so.
Yes, and we've seen a fantastic rally emanating at least in Lupin and also Aurobindo Pharma over the last 3-4 months. That's a well taken point, sir. Mr. Mehta, let's just shift focus to different asset classes. Gold. Now $2,000 an ounce, and this has been related to the kind of pain that we are seeing in the Middle East because of geopolitical tensions. You track gold for decades. Is this a time to make a fresh entry in this asset class, or let it be a single-digit percentage of your overall portfolio? How do you look at gold?
We're not very positive on gold at this point of time. And I think if you look at it, if you have a investing time frame of 3 to 5 years and beyond, then still I think equities will deliver exceptional growth. Make no mistake, we are in a multi-year bull market. The Indian economy is doing well. Earnings also are expected to do exceptionally well over the next 3 to 5 years. And once we are over with the general elections, that May 24 is certainly, a very important date that the market has to keep in mind. Once we are over and done with that, and we are assured of a stable government, hopefully the same government, this bull market can go to even higher levels from this point. It's just that for the time being, it may have run a little ahead of itself. So you want to be a bit cautious. But I think still firmly believe that equities will deliver the best returns over the next 3 to 5 years. So it's advisable to avoid gold, real estate from an investment perspective, or any of the other alternative asset classes.
Fair point. And we are in the middle of a fantastic rally as far as the medium to long term outlook is concerned on Indian markets. The short term indicators look to a bit of a downtrend, but those are opportunities to add, and gold is where gold should be, according to Mr. Mehta. Let's take a detour and review the pre-open markets which have opened on Monday. It's a green tick on the Nifty. I'm sure it will settle down in the red. For the moment, let's look at how stocks have opened as far as index heavyweights are concerned. The first stock I'd like to look at is ICICI Bank. A fantastic set of quarterly earnings released during the weekend, 2% higher at 954. In fact, 2.3% higher at 952, and that sparked a brief enthusiasm on HDFC Bank as well, the highest weighted stock on the Nifty and the Bank Nifty, up 2.4%, 1553. Let's look at Kotak, news driven, 1.5% higher, 1795. And let's look at Axis Bank, down third of a percent, 978. The other index heavyweights, no trades ticking on Infosys, 1427 in front of me, and of course Reliance down about 0.8%, 2280. So it's likely to be a banking day. Apart from ICICI Bank, you've had a slew of smaller PSU banks that have declared good earnings. So banks is something that we are looking at, and banks are something that are supporting the Nifty across the board. State Bank of India flat at about 563, but strong green ticks on HDFC Bank, ICICI Bank, Kotak, as well as now Axis. Okay, let's look at the other high beta space, which is the PSU basket. Let's see how stocks are opening. Remember, this was a bout of profit booking that was happening over the last 2 or 3 trading sessions on extreme profits that have been made. GNFC up about 2%, 670 in front of me. I have a green tick on Hudco, a percent higher, 78.15. Chennai Petro 0.5% higher. Cochin Shipyard 0.7% higher. Remember, Cochin Shipyard has made an announcement that its board will meet to discuss a stock split. So this is a stock that you need to look at. Let's look at the other high beta space in the market. You know, stocks like Tejas Networks, Bombay Stock Exchange, 3% higher, 1636. I have Paytm 1% higher, getting into 4 digits. I have PNB 0.5% higher, 72.65. So strong openings happening as far as broader markets are concerned. We'll let these trades settle down, and Nifty, like I pointed out, is going to slip lower, now up just 28 at 19,565. I think it's a good time to get Mr. Akshay Bhagwat in. He'll be shortly joining us, Senior Vice President for Derivatives Research at JM Financial Services. Obviously, the first question will be on ICICI Bank. A strong opening as far as banks are concerned, Mr. Mehta, and a nice uptick on both ICICI and HDFC Bank. If I were to force you to make a choice between what has been a fantastic how should I say, performance over the last 2 decades from HDFC Bank and what looks to be a promising growth for ICICI Bank, what would you choose? I know I've put you in a very tight spot, but that's why we have you. A choice between ICICI Bank and HDFC Bank.
It's clear my preference would be for ICICI Bank. And if you look at all the banking numbers which have come so far, end of the day, HDFC Bank's earnings per share went up only by 10.62% or thereabouts. So clearly, I think it's a laggard when it comes to reporting of earnings. That's not the same for some of the other peer banks which have come through, ICICI, IndusInd Bank, Federal Bank. I think they've all reported net profit or earnings per share growth higher than HDFC Bank. Of course, you may say that the integration issues are playing through and the synergy benefits have not yet been realized. But end of the day, the earnings per share growth has been very muted. And the numbers are not such that you will suddenly want to wake up and increase your allocation to HDFC Bank. And as I said, that with FI selling relentless as it is going into these banks like HDFC, to an extent ICICI, Axis as well. So if you were to ask me the choice between 2 banks, ICICI and HDFC, I'd certainly go with ICICI Bank because of superior earnings growth.
Fine. So that's the view coming in from one of the most intelligent and long-term watchers on the Lal Street. Remember, over the last 25 years, ICICI ICICI got listed in 1997, and HDFC Bank got listed in 1994, if 95 maybe, if memory serves me right. Both have given very, very strong multi-bagger returns, but ICICI Bank has often lived under the shadow of its larger peer, larger rival HDFC Bank. Maybe this is the time when the sun will shine a lot more brightly on ICICI Bank in the coming quarters, coming years, than on HDFC Bank, which on its own is undergoing a series of mergers and pain that is associated with the merger of its parent HDFC Bank with its kid. Okay, let's focus on other parts of the world as far as markets are concerned. I'd like to look at the defense space as well. I'm getting a very nice uptick on Cochin Shipyard now. Like I mentioned, this is the stock to watch, mainly on account of a corporate development. 2.5% higher, 1030. Zentech 1% higher, 720. Let's look at some more stocks which are more in the news segment. JSW Energy is trying to open 4.5% higher at 406. Delta Corp 1.7% higher, 132. We have Midhani, another defense counter, 0.5% higher, 423. RVNL, Texrail, these are stocks that are in the green. Let's look at the pre-open trades again. The Nifty is now reflecting reality, down 22 in pre-open trades, 19,524 in front of me. HDFC Bank has flattened out completely, 1523 in front of you. ICICI Bank is still up 1%. That stellar earnings that Mr. Mehta has so wonderfully described, 942. Kotak flat, 1769. There is no green tick, ladies and gentlemen, on the index heavyweights except for ICICI Bank and Bajaj Finance, 0.5% higher, 7,800. To you, Mr. Mehta, a very, very strong space in the NBFCs as far as quarterly earnings are concerned. You mentioned Poonawalla FinCorp in particular. How do you see this space in terms of the stellar returns that have already come in, and any particular outperformers on the longer term you feel should at least be on the watch list?
No, I think that these are great times for NBFCs, absolute blue sky scenario for them. They have all gone through a lot of difficult period right from 2018 until about a year and a half ago or so, where they were saddled with high NPAs and they had problems in raising resources. But now I think they're in a fine fettle at this point of time. They're able to raise resources at attractive interest rates, and the demand for credit is exceptionally strong. And the demand for credit is strong because the consuming industries, real estate, appliances, vehicle finance, SMEs are all doing very well, and therefore there's increased credit demand, which is the space that these NBFCs operate in. Microfinance is another interesting sector which is also scaling up pretty well. So we are seeing a lot of good growth rates coming through a lot of the NBFCs. And if you ask me specifically about companies, you can just check out the earnings of Credit Access Grameen. It's India's largest standalone microfinance company, has reported exceptional set of numbers. Again, a disclosure, we and our clients are invested, but very impressed with Poonawalla as well as L&T Finance, two other companies which we have investments in as well.
Okay, in my watch list, I'll add both these stocks, Credit Access Grameen and Poonawalla FinCorp. Okay, let's look at the charts in a while. And Akshay Bhagwat is with us, Senior Vice President, Derivatives Research, JM Financial Services. Good morning to you, Akshay. First off the block, your two picks for today, and then we'll discuss ICICI Bank's chart threadbare. Over to you.
Good morning, Shailji. Thanks for the invite on the show. Well, the two picks which I would recommend here, the first one is from the IT space. It is HCL Tech. So the chart structure is more consolidative if you look at short term, but the reaction was very strong after the results. So there was long addition on the derivative space, and although today might be a range bound day, but broadly the setup hints that the stock might reattempt 1300 on the upside. So I would be a buyer in HCL Tech at the current trades or at the opening trades. I would keep a stop loss below 1230 on the downside and target around 1320 on the upside. So that's the first buy recommendation I have. The second buy recommendation would be on Tata Motors. Now, Tata Motors has a very strong chart structure, some bit of a resistance, but that's more of a trading resistance, which we saw on Friday's trade. I believe if you get a chance to buy around 650, that's an excellent risk reward payoff which the stock would offer. So slightly on dips, Tata Motors would be on my watch list. 650 is the point to buy. Keep a stop loss of around 635 on this trade, and 690 is what I would be targeting Tata Motors in the short term space.
These are fair assessments, especially on Tata Motors. A breakout trade happened all of last week. Apart from Tata Motors, you've seen a very, very strong rally coming into the entire auto space, be it two-wheelers, four-wheelers, as also ancillaries. Akshay, before I tap Mr. Mehta on two-wheeler stocks, would you like to share your views on ICICI Bank post the stellar set of earnings that has come in?
Yeah, the result has been a stellar set of numbers, and even on the technical parameters, 925 is a very strong support zone for ICICI Bank. The broader chart setup signals a more of a consolidative pattern. We are nearing a very vital support zone. So the chances of a recovery or a reversal in ICICI Bank look a higher probability. In case it does, and I believe since the results are positive, it might be a candidate of a possible short covering bounce, which can see the stock head to 675 on the upside. So this is more of a trading target. This is more of a restrictive target. If it sustains above this, you can even see a revisit of 1000 as we head into the next series, that's the November series. So positive on ICICI Bank as long as it holds the support of 925.
Okay, that's the view that is coming in on ICICI Bank. Longer term charts, of course, have fairly been buoyant on this particular stock. Mr. Mehta, to you, how do you see this breakout that happened on Bajaj Auto based on very, very strong corporate earnings for the second quarter that had been announced? Your views on this space, anything that you like in particular for the medium term or the long term, be it a two-wheeler, four-wheeler or an auto ancillary?
Yeah, first of all, we're very positive on the auto industry, especially all the OEMs. Clearly, I think after many years of stagnation, we are seeing a good volume uptick. And more importantly, the premiumization trend is playing out very well in the auto industry, which is why the average selling prices of all models, two-wheelers, four-wheelers, even to an extent tractors and commercial vehicles, the average selling price is growing at about 10-12% annually, which is very positive and does have a very positive effect on the margins as well. I was pretty impressed with Bajaj Auto's numbers, and especially the way they are focusing on the 125cc and market share gains which they have made over there. But from a medium to longer term perspective, we would like to place our bets on Eicher Motors and other companies which we and our clients are invested in. And that's where I think we, within the two-wheeler space, a company which has the highest potential. But nonetheless, I think TVS and Bajaj Auto also will do equally well. And within the auto space, we like Maruti considerably a lot. And it's a company which I think the way the dynamics are playing out, next 2-3 years looks very good in terms of capacity expansion, in terms of new model introductions, in terms of the premiumization trend, which I spoke to you about. Very impressed with the way they have been able to capture market share on the UV side, utility vehicle side. So that remains our top pick. But I would just like to caution your viewers that these are all our assessment and are made proper disclosure here. They're not recommendations to buy, and each investor must do their own due diligence before they invest in a stock.
Fair point. An individual and independent financial view for all your fresh investments post hearing this conversation is of utmost necessity and importance. Gentlemen, I'll request some time from you. The pre-open trades have morphed into opening quotes. The Nifty is open flat, 21 points lower, 19,525. I just want to see what ICICI Bank has opened at stellar set of numbers, 1% higher, 941 for 942 in front of you. Let's look at Kotak because that's news driven. Is down 1.5%. Now this is disappointing. 1739 is what I see in front of me. The Bank Nifty is opened higher, and that's mainly on account of ICICI Bank has also short covering, 84 points higher, 43,820. There's a red dip on IT index, 110 points lower, 31,359. Let's again shift focus to index heavyweights. Okay, let's look at Reliance, and Reliance for me is flat, 22.99. How about HDFC Bank? A mild green uptick, 0.2% higher, 1526. State Bank of India, a third higher, 564. As also you have some strength in Bajaj Finance, 1% higher, 7827. Remember, the weekly expiry which was slated for Tuesday will happen today for the Fin Nifty, and therefore you see some crackling trades happening on Bajaj Finance. Immediately we'll shift focus to FNO stocks minus the index heavyweights, which is the top gainer here. Ipca Labs 4% higher, 971.55. GNFC 2.5% higher, 671. Delta Corp 2% higher, 132.35. This stock has been in pain. RBL Bank post earnings strong set here, 1.7% higher, 248. Muthoot, ICICI Bank, Hind Copper are in the green. Stocks that are losing ground: Laurus Labs, Kotak Bank, Grasim and Tata Communications on the FNO space. Immediately moving to the PSU basket because this is high beta, super high trading velocity. Gujarat State Fertilizer Corporation, no stopping the stock, 3% higher, 208.75. Cochin Shipyard, this is a stock you need to watch. An impending corporate development, 2.5% higher, 1027. J&K Bank 2% higher, post earnings 109. Garden Reach Shipbuilders 0.5% higher, 763. Moves coming in into MSTC, 0.6% higher, 475. Again, let's look at high beta across the space. BSE, gentlemen, 5% higher, 1671. The trading volumes on the Bombay Stock Exchange have exceeded all bullish expectations, and that's why you see a very strong uptick happening here. Apart from BSE, you see strong moves coming in. Angel One, 1.5% higher, broking stock 2385. CDSL moving 1% higher, 1356. Nifty flat is going to be a choppy trade. Remember, tomorrow is a holiday, so brokers are unlikely to and traders are unlikely to extend long positions. Coming to you, Akshay, what looks good?
I have Reliance on my watch list. Now, one of the reasons being that I believe this week you might have the results coming in for Reliance. Number one. Second is that it is currently trading at a very crucial juncture of its option support, which stands around 2300. So it is a possible short covering candidate ahead of the results and also the expiry day. Right now, it trades around 2295. So I'll be waiting for it to cross 2500, some strength, which would just give me a confirmation of my view. That will be the first buy point in the Reliance. The chances are high that it should reverse ahead of its results. If it does, then 2330 is where it should head for in the next couple of trading sessions. So expecting a bump up in Reliance, and Reliance is on my buy watch list as it stands right now.
Okay, Mr. Mehta, I'm sure will beg off a view on Bombay Stock Exchange. It's super overheated, although he started his journey from this particular index about 3.5 decades ago. To you, Akshay, what are the charts of the BSE telling you? Fresh record high in front of me, and it's 1680.
Well, it's been a stellar run for BSE. There is no stopping this index. And although overbought, it is beating all the prices on all the parameters. So I would not give much of weightage to the overbought conditions, because this would only restrict your targets if you are a short-term trader. Yes, some cool off is always possible, but I would consider it as a re-entry or for buying. So 1680-70 is the ideal level to buy in case the stock offers you a re-entry. If you are holding on to the stock, consider holding it. The support is very strong. Base of around 1550 is very strong base which the stock has built. I'm looking at targets of around 1750. That might be a stopover target for BSE. So positive view, continue holding or re-enter slightly on dip in case the stock gives you a chance.
Right. So this is, remember, not a chance to exit Bombay Stock Exchange. If you're fortunate to have that stock, as Akshay so wonderfully puts in, it was trading at about 450 rupee levels in April this year. It's now at least a 3x, 3.5x bagger as far as price is concerned, and there is no let up. Again, post earnings, RBL Bank in the pink of health, 251, 252 in front of me. Anything, Mr. Mehta, that has caught your fancy or your attention in this opening quotes? Nifty is flat, Bank Nifty is flat, IT index is flat, the top gainer is the small cap index.
Well, I think as I spoke about this company Credit Access Grameen, I think that's done as I expected. Numbers have been exceptionally good, and that's reflected in the stock price.
Okay, fair point. This is what Mr. Mehta feels. And giving sync to Bombay Stock Exchange is another stock that moves in lockstep with it. That's Central Depository, CDSL, better known as CDSL. Bombay Stock Exchange has, I think, now a 15% stake in CDSL. It had earlier had 20%, 1380 in front of you. Akshay, is this a catch-up trade in the making as far as CDSL is concerned?
Well, CDSL has been in a consolidative structure, the consolidation range roughly being around 1320 on the lower end, and it is right now heading at an important resistance or a breakout point, which roughly stands around 1400. 1400 has special relevance because if you see way back in September 22, the stock had seen a significant correction from the 1400 levels right all the way down till 900. So 1400, give it special importance for as a technical trader. There's a breakout which is setting up in the stock. If 1400 breaks out, you can anticipate significant higher targets, possibly 1600 is what we look for. But just from an entry perspective, let's wait for 1400 to break. That is the first criteria. In case it doesn't, then a dip of around 1300 should be the ideal level to re-enter the stock. The setup is positive. It's about timing the stock. So 1300 on the lower end or 1400 on the upper end is where you time the stock for higher targets till 1600 in CDSL.
Okay, so this is what the stocks are clicking at. Let's again shift focus to index heavyweights. I see a strong move coming in Bajaj Finance, mainly on account of end of account settlements on the Fin Nifty. A nice swing trade in the making. Would you stick your neck out, Akshay, here and talk about what Bajaj Finance charts are talking to you?
Yeah, rightly put, Shailji. It's more of a swing trade which is in the making, considering the fact that Bajaj Finance did break 8,000 very clearly a few trading sessions back, but somewhere post results it's been prone to profit booking, which has slightly dragged down the stock. So from the current levels, it's offering a swing trade. 7750 is the support. You can have a retest of 8075. So right now I'll be keeping a conservative target till 8075 or 8150 at the best. So a swing trade in the making, consider buying it, but as a swing trade, I would not be very confident about bigger targets as of now. Let it sustain above 8200, then we can revisit the charts. So a buy, but for a short term till 8175.
Okay. Mr. Mehta, we had a fantastic set of initial numbers coming out from Bajaj Finance when it talked about how assets under its management had grown and how business had expanded in the second quarter. Would you sort of make a case for Bajaj Finance at these levels, or how do you see the entry of Jio Financials in this kind of a market and this kind of a hotly contested space as far as Bajaj Finance's medium-term prospects are concerned?
Well, first, a disclosure, it's part of our core holdings across the board with our clients and ourselves. And it's been a great value creator for us, and kudos to the management for that. I think over the years, we are seeing that the price to earnings multiple, price to book is getting more and more reasonable for Bajaj Finance because prices have remained around these levels, but earnings have been growing at that 26 to 28% type of growth rates. I think it's ripe for a complete breakout. I don't know when it will happen. But clearly, I think there's a case for re-rating of the price to earnings and price to book for Bajaj Finance, considering its return on investment and superior business model. No doubt it will face some competition from Jio Finance, and not to mention so many other NBFCs are trying to, enter into Bajaj Finance's turf and model their offerings based on what Bajaj Finance is, offering in the market. But this is one company which clearly, is having superior growth rates. So very positive on the stock, and we remain invested. I think if there's a correction, we may look at adding even more. So this is one company which I would say is amongst the top pick within the NBFC space, but the strategy would be to buy at correction.
Fair point, and that's how Bajaj Finance has been. I would imagine over the last decade or so, this has been the best value creator, at least in the Sensex and the Nifty, and let's hope that trend continues. Huge multi-bagger returns coming in from this particular stock, and as far as financials are concerned, it's in the pink of health. Let's shift focus. It's almost 9:27. The first 15-minute bar on the Nifty will be made. Flat trade across the board as far as indices are concerned. Nothing much clicking there at all, mainly on account of a holiday that's coming up tomorrow. Let's look at how stocks in the F&O space are panning out. I see a nice uptick on Muthoot Finance. This is one of those top performers over the last 4 or 5 sessions, 2% higher at 1294. Akshay, what do you make out of these charts on Muthoot Finance? About 75,000 shares have been traded so far in trade. Your view on Muthoot?
The broader or the medium-term chart structure of Muthoot Finance is very encouraging. Well, if you look at it's in a range, it's confined in a range, the lower end of the range being around 1230 and the upper end of the range being around 1340. Now it is attempting to reach the upper end of the range. So in the short term, you can easily expect it to target 1320. That may be very soon on the cards. A positive setup. The momentum is very strong in the last couple of days. Derivative parameters have been supportive. So 1320 definitely is on the cards, but I would suggest that if you're taking a trade for bigger targets, because the way the consolidation is, soon it is going to give way in form of a positive breakout on the medium term charts, which can easily target around 1430 to 1450 on the upside. This might take 1.5 months, but I would be gunning for bigger targets. 1450 in Muthoot Finance, support of around 1230, so 1200 will be my stop loss, and as I mentioned, 1450 is I would look for in Muthoot Finance. So a positive setup by Muthoot Finance.
Okay, I am trying to raise the chart of Credit Access in front of you. This is after great prodding and much difficulty and extreme, how should I say, effort on part of Mr. Mehta. He named one stock, that was Credit Access, up fairly sharply today, 7% higher 1439, driven mainly on account of very strong corporate earnings, as Mr. Mehta put it. Akshay, coming to you first, what is Credit Access Grameen's charts telling you? It's already up 7.5%, so it's very difficult to step in at this moment, but a chart check on Credit Access, and then Mr. Mehta will share his investment thesis on this one.
See, today already 7% up, but clearly the momentum is strong. This might see a revisit of 1486, which is the swing high seen way back in September month. So 1470, 1480 are your short-term targets. But again, here consider slightly medium to long-term because the chart structure is really strong. Slowly, the stock is trying to move out of its consolidative band of 1300 to 1450. The broader or the medium-term targets are more impressive. Possibly 1550, 1570 is where the stock might be heading in around 2 to 3 months' time. So go for those targets. Right now, get into the accumulation zone. Momentum, if you're targeting 1480, as I mentioned, longer-term targets, if, as I mentioned, might be 1550 to 1570.
Cool. That's what the charts are talking as far as Credit Access is concerned. Mr. Mehta, to you, from the looks of it, a stock that you like, what would be the broad investment thesis here?
So I think within the NBFC space, microfinance is the fastest growing segment. It's a difficult business to do. It's not everybody's cup of tea, considering the small ticket size of the loan and collection challenges which take place over there. And from time to time, there is a political interference also. So it's a difficult business to do, and companies which have cracked the code over there clearly are benefiting from an upsurge in credit demand in the rural sector, as well as very good collection efficiencies which are underway at this point of time. And mind you, the net interest margin is amongst, or if not the highest within the NBFC space, comes in the microfinance segment. I know that from time to time, every 3, 4 years, the sector or the company does get into a crisis zone, but the net interest margin, the net interest income is so high that it can easily cover any NPA hiccups which do take place from time to time. Valuation wise, there's comfort level, and growth rates are far superior than any of the other NBFCs. So that's our basic premise of being invested in Credit Access. And I again reiterate, it's not a recommendation. Investors should do their due diligence. We've already made the disclosure that we and our clients are invested in it.
Fair point, and this is one of the stocks which will be added to my radar, Credit Access Grameen, as Mr. Mehta so eloquently puts it. This is something that you need to research at your end as well, and only then take a position, if at all. Thank you, Deepanji. What a pleasure having you over the last 1 hour or so. What wonderful views, and once again, festive greetings to you, your family. Good. Let's shift gears. It's Akshay as far as charts are concerned, and me spotting trades for you. Very strong move coming in Bombay Stock Exchange. We've discussed this once again. 1765. It's really super hot as far as a fresh record high is concerned, and it's the banking space that's ticking away merrily as far as gains are concerned. Taking cue from ICICI Bank. Let's again take a view on what's happening there. ICICI Bank up 0.9%, 940.70. HDFC Bank in the green, 1525. Kotak 2% lower, 1735. Akshay, to you, has Kotak been one of those disappointing stocks over the longer term? We've seen a fantastic rally on the banking space, even in the private sector. This is one stock that has really let a lot of long-term investors down. What are the longer-term charts talking to you as far as Kotak is concerned?
Well, definitely, Shailji, if you look at the performance of Kotak Bank right from the COVID, post-COVID era, that's almost from 2021, it's been confined in a trading range of roughly around 1650 on the lower end and 2000 on the upper end. So, in the space where, banking stocks have gone all guns blazing, PSUs have had a fantastic bull run in the past 3 months, Kotak somewhere has been a very serious laggard. Well, the broader term charts are still in a consolidative range, so not much reasons to worry there. But it is the short term space which is a worrisome case, because now, in case the markets were to show any kind of volatility or profit booking, then again Kotak Bank would be under pressure. So the lower end which of support 1650 once again comes into play, and how it plays around the support would be a very decisive factor to consider for Kotak Bank. So right now the setup is negative as far as short-term space goes. 1650, 1670 is the broader outlook which Kotak Bank can head for. Really, for this stock to show any improvement, the first hurdle it should cross is 1800. Till it is below 1800, expect it to continue to trade sideways or on a weak phase. The recent swing high is a kind of a hope, which is around 1700, but that's a mere hope. And I would suggest that it's better you can move on to other stronger names in the private space, like an ICICI Bank or an Axis Bank, or rather an IndusInd Bank over Kotak Bank as the charts read.
Okay, now bear in mind that's a technical view that Akshay presents. Fundamentally, there doesn't seem to be any discomfort or anything out of the ordinary missing from even Kotak's numbers. So it's one of those phases in lives that multi-bagger stocks have. They just quieten down. An unusual thing has happened in trade today, Akshay. I'm looking at the Nifty 500 most active list, and apart from the Bombay Stock Exchange, which is the top traded counter at about 322 crores, the next four stocks are actually, in terms of volume, the heaviest weighted stocks, the heaviest traded stocks. RBL Bank, it's a very, very unusual thing. Post earnings, 0.5% higher at about 245, 182 crore worth of shares changing hands. Kotak Bank, driven very strongly on news of a new person taking over the C-suite, Mr. Vaswani. He's ex-Barclays from UK, a man known for digitally transforming the UK-based bank. Unfortunately, Kotak is down 1.9%, 1735, but very, very strong volumes coming in, about 168 crores. ICICI Bank, sterling set of second quarter numbers, 942, up about 1%, 142 higher. 142 crores in trade, and of course HDFC Bank has been always the top traded counter, but today at the moment at about 937, it's at the fifth spot in the green, 1525, about 0.2% higher, and 142 crore worth of shares as far as trade is concerned. What else is moving in the market? Mahanagar Gas, I see a percent higher, 1039. It's the PSU banking basket which is moving fairly strongly as far as trades are concerned. Let's just shift focus there because that's the momentum space that's coming in. So we've discussed, let's discuss this particular stock. Akshay, Gujarat State Fertilizer Corporation. I think this is a fresh high. No, this is a fresh 52-week high on Gujarat State Fertilizer Corporation, clicking away at 206.35. Very, very strong volume show. We haven't had the first half an hour of trade, but already 52 lakh shares have been traded. Your view, Akshay, on GSFC?
Well, GSFC has pulled up very strongly if you look at the past few trading sessions from 170 to 210. So today as it stands, it did try to break out of a flag and pole pattern, but Unfortunately, from the tops of around 210, 212, we have seen some bit of profit booking in this space. The short-term parameters are slightly overstretched as it stands in GSFC at the current rates. I'm expecting some profit booking since we are in the expiry week. There is a possibility that 195 to 200 might be on the cards if you're a short-term trader. So short-term profit booking seen in GSFC, I would say that you can re-enter GNFC on a slight dip. 200, 195 is the zone to get in to the stock back again. Keep a stop loss below 190. The broader setup is still strong. It is only the short-term time frame charts which we have to deal with, since there can be a slight profit booking phase which I mentioned.
Okay, and it being a holiday tomorrow, it's no point sort of exercising too much of buying or selling at this point of time. Before we go to our corporate part of the show, let's look at the Nifty again. Down 11 points, 19,532. Remember, the fight is at 19,500 as far as the options chain is concerned. Tomorrow is a holiday. Today is the weekly expiry of the Fin Nifty, because tomorrow is a holiday, and of course we are in the last stage of October's monthly FNO expiry that ends on Thursday. So at the moment the low of 19,520 has been held, and the high is somewhere like 19,560. So absolutely range bound trade happening over the last 25 minutes on Dalal Street. Let's look at the top gainers as far as Nifty is concerned. Nothing much to talk about it. Nonetheless, ICICI Bank blowout trades happening there post earnings. 942, 1% higher, the top gainer on the Nifty. Power Grid 1% higher, 205.15. Bajaj Finance 1% higher, 78.53. M&M 0.5% higher, 15.70. Let's shift focus to our corporate radar, and we have Mr. Akash Agarwal. He's the director for V2 Retail Limited, a very well-known company that is at the forefront of meeting consumer demand with its showrooms across the country. We'll talk about how the festive demand is shaping up. Mr. Agarwal will join us in a moment, and we'll be discussing how Diwali and festive sales are coming in. But for the moment, I think it's more action on Bank Nifty. Before we let you go, Akshay, would you like to share your view on Bank Nifty for the medium term? What are the charts telling you? The stock, the index is somewhere like 200 DMA and has had a terrible October.
Well, Bank Nifty currently trades at a very crucial juncture, a possible double top support, which is around 43,650, 700, roughly, plus minus 100 odd points from the 43,600, 700 zone. So we need to very carefully watch how Bank Nifty plays out, maybe today or in the next trading session, because in case this breakdown happens, it's a problem for Bank Nifty. As of now, we won't consider that situation since we are trading at the support. I would be recommending a buy or taking a buy trade once Bank Nifty shows some kinds of sustenance above the 44,000 mark. So there's a criteria for me on the charts. Let it sustain above 44,000. That's the first criteria to buy. In case it does, then you can easily expect a reversal in Bank Nifty back to 45,000. But this junction where it is a pivotal juncture. A big move is in the making. Either it can be down or on the up. Let it break the supports of 44,500 before taking a short trade. So let's keep a watch on Bank Nifty. If breaks 43,500, I'll short Bank Nifty. If it crosses 44, I will buy Bank Nifty. So it's a conditional criteria which I have to trade with in the Bank Nifty as it trades at the current juncture.
Fair point. And with that, Akshay, thank you so much for your time. And once again, festive greetings to you, to your team and everyone at home, to all the clients at JM Financial. May the year ahead be more beneficial than what the previous years have been. Thank you so much for your time, Akshay.
Thank you. Thank you.
Okay. Shifting gears and moving towards the corporate radar segment of market today, we have with us Mr. Akshay Agarwal. He's the director at V2 Retail Limited, one of those chains as far as FMCG goods are concerned across the country. Mr. Agarwal, welcome to Market Today on Business Today Television, and upfront festive greetings to you, to your staff, and to all customers who come into V2 Retail and make it a wonderful venture that it already is. Welcome to Market Today, sir. Okay, let's begin with your understanding of how the festival demand is shaping up in different geographies and on different verticals. Where do you see better same-store sales happening as far as products are concerned, and which are the geographies that are popping up on your radar which are outperforming? Mr. Agarwal.
So we have seen a rise in footfalls and a good same-store sales growth across regions, and whether it's Orissa, Bihar, UP, Delhi, Uttarakhand. So it has been really good last couple of quarters for us, and it has been continuing into the third quarter. So we showed almost a 21% same-store sales growth in quarter one and 16% same-store sales growth in quarter two. And we are seeing even much better numbers in quarter three. And we have seen it across categories and across all the stores in India, whether it's north, south, east, or west.
Oh, that's wonderful news. V2 Retail, by its very nature, addresses the prime middle class segment as far as the Indian shopping basket is concerned. And if Mr. Agarwal points to increasing demand across geographies and across product verticals, that speaks volume about how the consuming and the purchasing power is shaping up. Mr. Agarwal, much of your growth depends on how you expand geographically across India. Could you share with us the new points of presence that you are opening up in various geographies, and how would V2 Retail's expansion look 6 months to 1 year from now as to what it is at present?
So currently we are operating about 107 stores, and we plan to open 10 to 15 stores in the next 4 to 5 months. And if you talk about a 1 year horizon, I think we would open about 20 to 25 stores. And talking about the geographies that we're targeting, we're trying to take a cluster-based approach. So we're trying to open more stores in the geographies that we're already present in and that we already have good sales in. So that helps us a lot with logistics, marketing, and people already know about the brand V2 there. So that's the approach we're taking. So we are focusing on markets like Jharkhand, Orissa, Assam, and Bihar and UP.
And these have been traditional markets for huge growth that you see across North India when it comes to the festival demand. In terms of logistics and all sorts of other efforts that you make in Mr. Agarwal for the product to reach your showrooms, have things improved now than what they were, say, maybe 6 months to a year ago, when supply chains were a bit in pain?
Yes, things have improved a lot, and I would also commend how India's infrastructure has also improved, and the fast tag system on the highways have also reduced transit time. And we are also very excited to see the rising middle class segment in tier 2, tier 3 cities that we cater to. And everybody is seeking good quality and reasonably priced fashion. So we are very excited to be in this value fashion space because Indian customers look for value, and we are here to provide them value.
Okay. Mr. Agarwal, there have been two divergent trends when it comes to middle class shopping, and we'll touch briefly on both of them. What is the advent of online shopping that has taken over at least the age groups of maybe 18 to 30? There is this huge uptick that we see in online deliveries, and it's evident in all middle class homes. You see couriers coming in once or twice a day. How has that impacted V2 Retail, and then we'll look at the aspirational part of the market as well. But first, how are you battling your peers in the online side?
So yes, we have seen a rise in online e-commerce penetration in the geographies that we operate in, but we believe the market is big enough to accommodate a lot of different players because still the share of organized retail in India is a very small percentage of the total market. And talking about our plans, we plan to be an omni-channel business where we would use all our stores as inventory centers or distribution centers. And I think we would be live with our omni-channel solution in about 3 months. So I think having an online and offline both approach would really help us compete with just online brands or players, because once you make your brand name offline, you can connect with those customers and you can cater to them with your online store. So that's the way forward that we are going to go through.
Okay, and one thing that's often said against the Indian middle class, or it's more of a political jumla that incomes are getting squeezed because taxes are on the rise, and there hasn't been a commensurate increase in salaries. Because you address this part of the Indian middle class in such a granular manner, what have been your learnings over the last 2 odd years? Have single ticket purchases increased in terms of quantum, volume, and price, or what is generally listened to in the broader space is true?
So talking about the broader economical sense of it, I think if our country grows at 6-7% for the next 5 years, which is planned, so I think everybody gets a chunk of the pie. So I think the incomes are going to keep increasing and the middle class is going to keep ballooning, which is good for our segment. And talking about the average bill value, we haven't seen a very large increase in the average bill value, but we have seen a big increase in the number of bills. So it means that the footfalls in our stores have increased. So more people are coming into the stores, and that's why we're seeing a high growth.
Okay, and the other fact which is completely undeniable, that the aspirational part of India is moving far ahead as far as comparison with the middle class and the lower middle income is concerned. Just yesterday I was reading news that cars above 1 crore have been sold more in numbers compared with cars priced between 50 lakhs to 1 crore. Obviously, you don't address this segment via V2 retail, but I'm sure you as a person are a part of this aspirational growth story that is coming in. Any chances that V2 retail will also look at that segment?
We don't have plans to look at that segment because the segment that we cater to has an immense potential that we haven't even tapped, not even 1% of that market. And when you talk about aspirations, I think every common man in India is aspirational now, especially with the advent of social media and internet penetration. So in terms of fashion, everybody is aspirational. Everybody knows what the latest fashion is. Everybody wants to look good. And we are here to bridge that gap and provide them affordable fashion at the best prices.
Fair point. Mr. Agarwal, we've so far talked about the good parts of corporate India, as also the kind of spectacular growth that companies like you have shown. Tell us what are the pain points in your business, 2 or 3 that keep on bothering you, those niggling things that make business difficult in India. What are the pain points that V2 Retail as a corporate is facing?
So if I have to talk about the pain points, one pain point is pilferage. So a lot of we find like we catch at least 2 or 3 thieves in all our stores every day. So that's why we put a security hard tag now on all the garments. So that has really helped us decrease the leakage from the stores. Another pain point is attrition at our store level, because a lot of new retailers are coming into the space. So they are looking for manpower. So retention of manpower at the floor level has been a challenge. And the third challenge is adopting new technologies and digitalization, because we want to innovate, keep innovating, and provide the best for our customers and employees and stakeholders. So there is so much going on in technology and adopting AI. So those things have been a pain point, but we are trying to solve all of them and come out stronger.
What would be the attrition rate on the floor level for V2 retail, Mr. Agarwal?
It's almost around 30%.
Oh, that's fairly high. You mean to say 30% of staff moves out each quarter, which is employed on the shop floor?
No, I'm talking about yearly attrition.
Oh, it's Q on Q.
No, like in 1 year, 30% of the staff is churned at the floor level for a 12-month period.
Okay. That's yes. Okay. I mean, I'm sure there are worse sectors to look at, especially the data centers, as also the call centers, which see 75 to 80% attrition. But yes, 30% would be painful. Coming to the trend globally that we see in retail, such as the businesses that you see, a lot of pain is also being experienced by the likes of Walmart, especially on the pilferage side that you mentioned. A lot of chains in the UK are shutting shop in specific geographies. Have you also experienced some kind of a trend that you see in a particular geography in India where pilferage is beyond control?
So we have regular stock takes happening at all our stores because of the steps that we have taken, and we have a loss prevention team of almost 35 to 40 people nationally that has one KRA, that is to reduce pilferage. So we have a lot of checks and controls. So we haven't seen it go out of control, but there have been outliers, not in terms of region, but there were a couple of stores that were showing unusual numbers where we had to change the team and replace the team because it all depends on how you execute your checks and security measures. And we found that it wasn't efficiently executed. So once we changed the team and we got better people on the floor, we were able to control the numbers.
Mr. Agarwal, what about stock keeping units? One of the biggest pain points is, of course, for you to attract fresh customers is increasing the display that you have, and at the same time it causes a lot of inventory pain points. How have stock keeping units within V2 retail gone up over the last 6 months to 1 year? And is there a trajectory that you could share with our investors, viewers, on how this number will move up in the next year or so?
So our average store size is about 12,000 square feet, and we have broken down the year in 4 seasons. So each season we cater between 3,000 to 4,000 SKUs. But because there are leftovers from the previous season, on the shop floor, average of about 5,000 to 5,500 SKUs are always maintained. And going forward, this trend is going to continue because we have already dedicated space and number of options, and we've done a option planning and assortment planning. So every season it comes out to around 3,000 to 3,500 options nationally.
Okay, and Mr. Agarwal, my final question to you is, how do you think this digitization in India has impacted the way you collect cash, the way you collect payments made by the middle class in India? Could you share with our viewers how digital payments at V2 Retail have moved up over the last 1 year or so? Our checks at petrol pumps, our checks at broader markets suggest that digital payments for purchases below 100, below 1,000 have moved up dramatically. What has been your experience?
Yes, definitely. We have seen a huge rise in digital payments, whether it's UPI or credit and debit cards. but I would not say it's the last 1 year. It happened right after demonetization. So pre-demonetization, our digital payment contribution was just 10%, which has moved up to almost 30% now.
Oh, that's wonderful. That's the broad themes that we also understand. About 35% of daily transactions in India have turned towards the digital payments. Mr. Agarwal, thank you so much for your time, and we hope the best of what corporate India has to offer in terms of festivity buying comes across to V2 Retail over the next 3 months or so. Thank you so much for your time, and all the best for the festive season ahead.
Thanks a lot for having me. Thanks.
It's our pleasure, Mr. Agarwal. And coming back to markets, like I had mentioned, it will be a flat trade today. The Nifty is lying absolutely still, 19,542, and this is where it had shut shop on Friday. It's a holiday tomorrow, and that's how trade will be: volatile, choppy, low on volume, and remain in a range bound as far as Nifty is concerned. The day's high has been 19,560. That was hit in the first 5-minute candle, and the low so far has been 19,515. Thank you so much, ladies and gentlemen, but remain glued to BTTV for all your requirements as far as financial news is concerned. For the moment, goodbye.
Hello and welcome. You're watching the Royal Ranthambore BT Golf Season 2024. I'm Sakshi Batra, and here at the course, I'm now joined by 4 golfers right here. Let me begin by asking them to introduce themselves. Sir, to start off with you.
Hi, I'm Amit Dhaya. I'm running a security company in the name of Superior Securitas.
Okay.
I am Anubhav Jain. I'm the CEO for Silverglades Group.
Okay.